Welcome to Explain the Charts. It is April 13th, 2026, and today we are tackling the heavy hitter of the tech world, the QQQ. The market is currently navigating a complex web of narratives, ranging from semiconductor-led rallies to geopolitical stress in the Middle East. As of today, we are seeing the Nasdaq 100 trading around the 25,250 level, showing a modest gain of about 0.5%. The primary headline weighing on investors is the fear of a blockade in the Strait of Hormuz, which has historically sent oil prices higher and stocks lower. However, the tech sector, specifically AI giants like Nvidia, continues to provide a massive lift, helping the Nasdaq stay green while blue chips retreat. We also just saw the March CPI report, which came in at 3.3% year-over-year, largely driven by a significant surge in energy costs. This data has created a tug-of-war between those who fear persistent inflation and those who believe the AI boom is decoupled from the broader economic cycle. Additionally, Nasdaq leadership is appearing before the House Financial Services Committee to discuss the tokenization of capital markets. This push for modernization suggests a long-term structural evolution in how these assets are traded and regulated. With all this news in the background, we need to see how the price action is actually responding on the charts. Looking at the one-day chart for QQQ, the long-term trend remains remarkably resilient despite several high-volatility events over the past year. If we cast our eyes back to late 2024, the QQQ was hovering around the $500 level before beginning a steady climb. We saw a significant period of turbulence in early 2025, specifically around the April 2025 timeframe, where prices dipped sharply. Let's zoom into that specific period to understand how the market handled that correction. In this zoomed view of April 2025, you can see a massive V-shaped recovery that took place after a 12% correction. Notice the candle on April 4th, 2025, where the price plummeted to $422 with an astronomical volume of 117 million shares. This was a clear capitulation point, likely triggered by the Israel-Iran conflicts mentioned in our news reports. The very next day, a massive 12% gain on April 9th signaled a powerful reversal as the market realized the downside was overextended. This historical context is vital because it shows that the Nasdaq has a tendency to snap back violently when geopolitical fears reach a fever pitch. Throughout the rest of 2025, we saw a series of higher highs and higher lows, eventually pushing us into the $600 territory by October. However, since late 2025, we have entered a phase of consolidation between $600 and $635. The daily candles in early 2026 show a series of indecisive dojis and small-bodied candles, suggesting the market is waiting for a clear catalyst. We are currently sitting just below the all-time high of approximately $637 established in late October 2025. Resistance is very clearly defined at that 635 to 637 zone, where sellers have stepped in multiple times over the last few months. Transitioning to the 1-hour chart, we can analyze the more recent price action from late March into mid-April. There is a notable support level that has formed around the $582 mark, which held firm during the mid-March volatility. From that 582 low, we saw a steady ascent throughout early April, characterized by consistent buying volume in the opening hours. On April 8th, we saw a significant gap up where the price jumped from $588 straight to over $600. This gap serves as a runaway gap in technical terms, suggesting that the bulls have regained control of the short-term narrative. We are currently seeing a consolidation pattern just above the $610 level as the market digests the news of the Hormuz blockade. The fact that we aren't seeing a massive sell-off in response to the geopolitical tension is a bullish sign of strength. It indicates that buyers are willing to step in at higher levels, anticipating that the tech sector's earnings will outweigh regional conflicts. Look at the volume bars on the hourly chart. They are relatively balanced, which suggests a healthy consolidation rather than a distribution phase. The VWP is currently hovering right around the current price, acting as a magnet for short-term price action. Now, let's look at the 15-minute chart to get a granular view of the last few trading sessions. Over the period of April 8th through April 10th, the intraday trend has been incredibly orderly. On April 8th, the price action moved from 609 down to a low of 603 before recovering back to the 605 level by the close. On April 9th, we saw a similar pattern where an initial dip was met with aggressive buying, eventually closing near the highs of the day at 610. April 10th showed even more resilience, with the price maintaining a narrow range between $609 and $613. This tight price action often precedes a significant breakout, and given the overall trend, the bias leans toward the upside. If the price can break and hold above 614, the next target is that major daily resistance at 635. Conversely, a break below the 603 level on the 15-minute chart would signal a short-term reversal back toward the 580s. Short-term traders should watch the 609 level very closely as it has flipped from resistance to support over the last 48 hours. We are seeing a series of higher lows on this time frame, which is the classic hallmark of an accumulating market. So, are we bullish or bearish on QQQ for the remainder of April 2026? In the long term, the case for being bullish is centered on the AI sector's growth and the potential for tokenization to increase market liquidity. Semiconductor giants are providing the necessary lift, and the daily chart's recovery from the 2025 dip proves the market's underlying strength. However, in the short term, there are reasons to be cautious due to the 3.3% inflation rate and the energy price surge. If geopolitical tensions escalate further into a full-scale regional war, we could see another 5 to 10% correction like the one in April 2025. Currently, I would categorize the market as cautiously bullish as long as we stay above the 580 support level. The most important price levels to watch right now are 614 for a breakout and 603 for a potential breakdown. If we see a daily close above 614, there is a high probability of retesting the all-time highs near 635 within the next 2 weeks. If we fall below 603, we should look for a retest of the 582 support zone as a buying opportunity. Volume will be the key indicator to watch. A breakout on low volume is often a trap, so look for a surge in transactions to confirm any move. To recap our analysis for QQQ on this April 13th, the major resistance stands at 635, while immediate support is at 609 and 603. The long-term trend is up, but macro headwinds like inflation and Middle East tension are creating significant short-term noise. I believe a move to 630 is about 65% likely if the current AI optimism holds and geopolitical news doesn't worsen. Conversely, a dip back to 580 has a 35% likelihood if the Hormuz blockade becomes a long-term reality. Keep a close eye on Federal Reserve speeches scheduled for later this week, as they could shift the interest rate narrative. Also, watch for Goldman Sachs earnings, which will provide insight into the broader health of the financial markets. Remember to always use stop losses and manage your risk according to your own individual trading plan. Thank you for watching Explain the Charts, and if you found this analysis helpful, please like and subscribe for more in-depth data dives. Disclaimer: this video is for educational purposes only and does not constitute financial advice. Always conduct your own research or consult with a licensed financial advisor before making any investment decisions.